Good morning, everyone. Well, the dollar rallied against almost all of its G10 counterparts yesterday, despite continuing soft U.S. economic data. For example, U.S. manufacturing output rose only 0.1%, and in particular, production of computer and electronic products dropped. Now, that's important because this component, the computer and electronics components, is used to estimate equipment spending in the GDP account. So that means fourth quarter GDP is going to be lower. Pending home sales plunged as it seems that housing demand was brought forward by expectations of rising interest rates. And on top of everything else, the Dallas Fed manufacturing activity survey was far weaker than expected. But there's been a consistent pattern recently of dollar buying early in the U.S. session. And that continued yesterday. They bought dollars when they came in. This may be some cautiousness ahead of the FOMC meeting that starts today and finishes tomorrow. If you look at the moves in Eurodollar this year, most of the moves have come just on three kinds of days: FOMC days, ECB days, and US payroll days. Probably some people think that there's just a narrow window of opportunity for the Fed to begin tapering before negotiations over the government budget start up again in December, and then we've got the budget ceiling again in February, blah, blah, blah. So they think that maybe the FOMC will decide to take a chance and begin tapering now rather than miss this opportunity. Personally, I disagree. I think given the slowdown in hiring that we've seen recently, if anything, the FOMC would be more likely to vote for further quantitative easing at this point rather than tapering off its existing QE, although that seems extremely unlikely too. In any event, today, during the European morning, we get UK mortgage approvals for September. They're expected to have increased for the third consecutive month. That could help to support the ailing pound, which fell yesterday on comments from Bank of England economic advisor David Miles. Later in the day, U.S. retail sales for September, excluding autos and gasoline, are forecast to be up by 0.5%. That would be an increase from, or an acceleration from 0.1% growth in August. It could help to boost the dollar further, although, as I just said, yesterday's weaker than expected data didn't hurt the dollar, so maybe stronger than expected data won't help it either. We've also got the S&P Case-Shiller House Price Index for August. It's forecast to basically show the same year-on-year rise as it did in July. Finally, the market looks for a fall in the Conference Board Consumer Confidence Index for October, which would not surprise anyone. For more information, including technical analysis on the currencies, please read the full comment on IronFX.com. You can also like us on Facebook, follow us on Twitter, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, Head of Global FX Strategy at IronFX, wishing you solid trading.